Hello viewers, welcome to my channel. I am Hasham. So in this video, I am going to explain you the topic contract costing under the subject cost accounting. Already so many videos I have uploaded on the problems on contract costing. So in this video, I am going to explain you briefly the theory about contract costing so that you can be able to write in examination the theory question regarding the contract costing. So very often in examination, a theory question will be asked regarding the features of contract costing, what are the different terms used in contract costing, etc. So watch the video till the end so that you can get confidence on this topic of contract costing and confidently you can write in examination about the contract costing. So first of all, I am beginning with the meaning of the term contract. A contract is an agreement between two parties in which one party agrees to perform some work on behalf of the other party for a price during a specific period of time. The person who is performing the contract is executing the contract is called the contractor, and the person for whom the work is being done is called the contractee. The contractor, the person who is executing, doing the work, whereas contracting is the customer for whom the contractor is performing or executing the work. So normally this contract costing will be applied in case of construction of building, construction of bridge, construction of dam, construction of road, etc. So these types of work, the contract costing will be applied. This is the meaning of the term contract. Now, types of contract. Broadly, we can divide the contracts into three types. First one, fixed price contract. The fixed price contract is that contract in which the price of the contract is fixed between the contractor and the contractee, and that price will not change till the completion of the contract. So, in this fixed price contract, the risk is fully on the head of contractor. Suppose if the price of material labor increases, then his profit margin will come down. He is exposed to risk. Contrary to this, if the price of material and labor has come down, he will get more profit. So risk lies entirely on the head of contractor in case of fixed price contract. Second one, cost plus contract. In this type of contract, there is an agreement between the contractor and the contractee. That contractee will make the payment of the cost incurred by the contractor plus a percentage of margin. Example, there is an agreement between the contractor and the contractee that contractee says, I will pay you 20% to profit on cost. So whatever cost you incur, to that we add 20% profit and will make the payment. For example, during a particular year, I am the contractor, I have spent 10 lakh rupees on the construction of the contract. Then you are the contractee, you will pay 10 lakh plus 20%. 20% comes to 2 lakh. So 12 lakh rupees you will make the payment. This is called cost plus contract. In this case, the risk of the contractor will get reduced because definitely he is going to get the profit, whatever be the prices. Then fixed price contract with escalation clause. Sometimes the agreement between the contractor and the contractee is such that a fixed price contract is made with an escalation clause. Escalation clause means contractee will say, if the material price increased by 10%, then I will increase the contract price also by 10%. If there is no increase in the material price, I will not increase the contract price. This is called escalation clause contract. So these are the three types of contracts. Now, meaning of contract costing. Contract costing is a method of costing which is applied by those businessmen who are engaged in constructional activity, who are engaged in constructing the buildings, roads, dams, bridge, etc. So these people will adopt the contract costing. So contract costing is a special type of job costing only, because every contract will be a unique contract, different contract, and all cost incurred will be charged on that contract. So a contract will be treated as a cost unit, a cost unit. All the cost incurred on a particular contract will be charged to that contract only. So separate contract accounts will be maintained by the contractor. So it is also just like a job costing, but the difference is here the activity, the job is constructed at site, not in the factory. Whereas job costing, the jobs are conducted in the factory. Whereas in contract costing, the job is executed at the site. And whereas job costing is a small term costing method, because the time duration required to complete the job will be short. But in case of contract costing, the duration of time required for completing the contract will be long. So this method is called contract costing method. Now, features of contract costing. The first feature is recording cost incurred for completing the contract. Every contract will be allotted a unique number. It will be identified with the number, and all the cost incurred on that contract will be charged to that contract only. So a separate contract will be maintained. A separate account will be maintained for every contract. Second, contracts are generally of large size. If we see this contract costing system, the time, the cost required will be large enough. That's why this contract will not be finished in 1 or 2 months like that. It may go for years because the contract size is very large. It requires more time to complete the contract. Third, contractors usually carries on only few contracts at a time. So a contract has the limitation. He cannot be able to take up hundreds of contracts at a time, because he cannot be able to manage all the contracts. So at a moment of time, at a particular period of time, a contractor may have few contracts on hand. Next one, most expenses are incurred at the site. The contractor will incur expenses on the site. So most of the expenses like material, labor, direct expense are incurred at site only, at the site. Next, each contract undertaken is treated as a cost unit. Suppose if I am the contractor, I am having 5 contracts on hand at a time. So all the 5 contracts I treat it separately. Every contract will be treated as a cost unit. So I will charge all cost incurred on that contract only. I want to find out what is the profit on every contract separately. I will not mix up. Then separate contract account is prepared for each contract. Every contract will be a unique one. So I will treat every contract as a separate cost unit. Next, most of the contracts are more than 1 year for completion. Very few contracts are there which are completed within 1 year, but many times, many contracts are there which runs over more number of years, more than 1 year. The contract may be completed in 2 years or 3 years or 4 years like that. So very few contracts are there which are completed within 1 year. Payments will be made by the contractor at various stages. See here, in contract costing, the lump sum amount, whole amount will not be paid by the contractee to the contractor. As the work progresses, the contractee will make the payment. For example, during the first year, only 40% of work has been done. The contractee will pay only up to 40% of contract price. Next year, as the work progresses, that amount only will be paid by the contractee in installments. The whole amount will not be paid by the contractee. Most expenses are direct cost and small proportion of cost are indirect cost. The cost can be divided into direct and indirect. Direct cost is that cost which is specifically incurred on the particular contract. So most of the expenses are direct only. Some indirect costs are there like administration cost or marketing cost. So these costs will be apportioned between different contracts on some suitable basis. But the proportion of indirect cost is very small. Most of the costs are direct only. So these are the features of contract costing. In examination, theory question will be asked about what is contract costing, what are the features. So just now you have watched, you have listened the lecture, you can be able to write. Now advantages of contract costing. Many advantages are there. First, ascertainment of contract cost. By maintaining contract costing, we can be able to ascertain what is the total cost incurred on a particular contract. When we can be able to ascertain the total cost, we can be able to find out the profit. How much profit we are earning from each contract, we can be able to find out. Second, protection against loss. Normally, if the contract is small, we apply fixed price contract. But when the contract size is very large, fixed price contract normally will not be applied because there's a lot of risk attached to this big contract. So that amount of risk the contractor will not take. The contractor will enter into cost plus contract. Cost plus contract. So in this way, there's a protection of loss from contract business. Next one is retention money. The contractor will be in a better position by retaining some amount. He will not pay the whole amount. In the agreement of contract, the retention clause will be written. What is this retention clause? The contractor will not pay all the money which is certified. Only 80 to 90% of work certified will be paid by the contractee. Remaining 10-20% will be withheld by the contractee. Suppose if there is a faulty work or if the work is not completed within the stipulated time, he will be in a better position. So some amount is withheld by the contractor, he will not pay the whole amount. When the contract is completed, he will make the full payment. Then escalation clause. Normally, because due to inflation, the price of material and labor are increasing in the market. So there is always a risk attached with the contract in the contract to the contractor. I am the contractor, I am exposed to risk. What will happen in the market, I don't know. If the metal price increases, I will be put to losses. The escalation clause will be inserted so that my risk will get reduced. Last one, faster execution. In this contract costing, I am the contractor, I will do the contract with a faster speed. I will complete the contract as soon as possible. I will not delay the work. Why? Because by delaying the work, I will not get sufficient amount from the contractee. The contractee will make the payment only when I perform the work. So I will perform the work fast so that I can be able to get the money from the contractee. So these are the advantages of contract costing. Now procedure for contract costing. What is the procedure? First one, contract account. A separate contract account will be opened for every contract and all the expenditure incurred on the contract will be debited to contract account to find out the profit. Then direct cost. Most of the cost incurred on contract are direct cost which are incurred at site. Example, material, cement, bricks, sand, etc. Then labor charges, direct labor charges. Then direct expenses, plant issued. All these are the expenses, direct expenses which are specifically charged at the site. Indirect expenses, very few, small amount of indirect expenses are there like administration cost or marketing cost, which should be suitably divided between different costs. Then transfer of material or plant. Sometimes some material or plant is unused at the site. So this unused material will be transferred either to stores or to other contracts. So in that case, the contract account is credited by the material which is sent to stores or material which is transferred to other contracts. Contract price. The contract price will be credited to contract account if the contract is completed. If the contract is completed, the contract price will be taken on the credit side of the contract account. Profit or loss on contract. Suppose if the contract is completed, then contract price will be taken on the credit side of contract account, all expenses will be debited, the profit will be transferred to P&L account. Profit will be transferred to profit and loss account. But if the contract is not yet completed, then we should not write contract price on the credit side of contract account. We'll take WIP, work in progress. In that case, the balancing figure will be notional profit, imaginary profit. From that notional profit, some part will be transferred to P&L account and the remaining balance will be transferred to work in progress as reserves. The whole profit cannot be transferred to P&L account because still the work is going on. So these are the procedure of contract. Now treatment of various items. Now I am going to explain you the treatment of various items which are used in contract costing. First one, material. The material is the biggest element of cost in contract costing. So material cost will be debited to contract account. Some material will be purchased, some material will be issued from stores. So all the material will be purchased or issued from stores will be debited to contract account. Secondly, labor. The labor paid and outstanding labor charges that will be debited to contract account. Third, overheads. Sometimes a small proportion of overheads, indirect expenses are also charged to contract account. So debit side contract. Subcontract. The main contractor will give some work to the subcontractor. Example, I am the main contractor of construction of building. Suppose the plumbing work I have given to a plumber. I have given the contract to a plumber. So I am paying to the plumber for performing that plumbing work. So this is called cost of subcontract. This cost of subcontract will be debited to contract account. Then plant issued and depreciation on plant. See, sometimes some plant is specifically purchased for that contract. So value of the plant will be debited. Example, the plant value is 5 lakh rupees. Specifically purchased for construction of this building. So 5 lakh rupees plant will be debited to the contract account. At the end of the year, the value of the plant remaining is 4 lakh rupees, 1 lakh rupees depreciated. By using the plant, the value of plant will get depreciated. The closing value of the plant at the end of the year is 4 lakh. The debit side I will take to plant 5 lakh. Credit side I will take plant at close 4 lakh. The opening plant debit side, closing value of plant credit side. Suppose if the plant is used only for a small duration, just like 2-3 months, only depreciation will be calculated and debited to contract account. Next, work in progress. See here, on the credit side of contract account, we will take work in progress, which includes work certified and work certified. If the contract is incomplete. If the contract is completed, then work in progress will not be taken. It will be taken by contract price or by contractee. By contract price will take. But if the work is still going on, incomplete, then we take work in progress, which consists of work certified and work uncertified. What do you mean by work certified? At the end of the year, an expert person known as architect will be called. An architect will make the survey of the work done. So he will give a certificate that the work done completed is, let it be 70%. He will give a certificate. Architect will give a certificate that 70% work has been done on this contract. On the basis of this work done only, certificate only, the contractee will make the payment. So that is called work certified by the architect. Work uncertified. There may be some work which is not up to the mark, which gives him certification. So architect will say that this work is done, but I will not certify because it has not reached up to a particular stage of completion. So that work which has not reached up to the stage of completion, it is called uncertified work. So both work certified and work uncertified will be taken under work in progress. Payment terms. As per the contract agreement, the terms are given. How much payment will be made by the contractee to the contractor. That means depending on the percentage of work completed. Then amount received from the contractee. When amount received from the contractee account is credited. So his account will show credit balance. The contractee's account is showing a credit balance. It should be shown on the liability side of the balance sheet. But normally what will happen, the contractee's account which shows credit balance will not be taken on the liability side. It will be deducted from work in progress on the asset side of the balance sheet. Asset side of the balance sheet, I am going to take work in progress. From work in progress, I deduct cash received from contractee. So these are the treatment of various items in contract account. Now guidelines to assess profit on incomplete contract. There is a lot of literature on how to account the profit on incomplete contracts. Suppose if the contract is completed, there is no question at all. Whatever profit we are having, the whole profit we can transfer to P&L account. But if the contract is not yet completed, work in progress is going on, so how much profit should be recognized? In that case, some general rules are given. The rules are, no profit should be taken on contract that have not made sufficient progress. Generally, no profit should be taken on account if the contract is completed up to 1/4. So general rule, if the contract is completed only up to 25% of contract price, no profit should be taken to P&L account. The whole profit should be transferred to reserve because the work is completed up to 25%, not more than 25%. If the work contract is more than 1/4 but less than half, if the contract is completed more than 25% but up to 50%, less than 50%, then we calculate notional profit into 1/3 into percentage of cash received, or notional profit into 1 by 3 into cash received by work certified. Both formula will give you the same answer, right? So first we calculate notional profit into 1 by 3 into percentage of cash received or cash received by work certified. This is the amount of profit to be transferred to profit and loss account. Remaining notional profit will be transferred to reserve if the work is completed more than 25% but below 50%. If the work is completed half or more, 50% or more than 50%, then the formula will be slightly modified. Notional profit into 2 by 3 into percentage of cash received, or notional profit into 2 by 3 into cash received by work certified. This is the amount of profit to be transferred to P&L account, profit and loss account. Lastly, if the contracts are almost completed, example 95% contract is completed, that is called almost complete contract. In that case, we calculate estimated profit into work certified by contract price. So these are the rules which are applied to recognize the profit when the contract is incomplete. That's all. Here I have given a format of the contract account. See here, contract or format account, debit side to material purchase, to material issued from stores, to wages, to plant at cost, to direct expense, to establishment charges, to other indirect expenses. These are the items, normal items, which are debited to contract account. Credit side by work in progress, if the work is not yet completed, if the contract is not yet completed, then by work in progress, work certified, work uncertified, by plant account closing value, by material on hand, by material destroyed. Normally credit side the total will be more. So from the credit side total, deduct all debit items, the balancing figure will be called notional profit. It is called notional profit, imaginary profit balance carried down. Here by notional profit brought down, debit side to profit and loss account, to WIP reserves, balance transfer to reserve. Some part of notional profit will be transferred to P&L account and the remaining balance of notional profit will be transferred to WIP reserves. How much profit? Just now I have explained you. So this is the complete theory regarding contract account. So if you are satisfied with my lecture, give a like to the video, share the channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge, and give your comments on these lectures. And lastly, don't forget to subscribe my channel.